If you look at the fundamentals of some of the European markets, and there's really interesting stuff that comes out. So just an analysis of the number of cities which have over 20,000 students. In the UK, that's approximately 20. In Germany and France, that's 40. So there's a huge opportunity, not just the A cities that we've been talking about a bit earlier, but outside of the A cities in some places which may not strike a Middle Eastern investor as being a kind of very obvious place, but one which does offer a lot of opportunity. I think I'd also say that Alex mentioned about a mid pricing point, which is an area that should probably get a bit more attention from investors. In that there's a lot of opportunity to take what has been provided before, push it on a little bit more, add more student experience, and the other aspect of this is the availability of stock. We're probably going to have to do this through a fair amount of Excel.
Okay, good. John?
So, I mean, I've got to say, obviously, UK build to rent, because having just raised some equity for that, and we've got to say we're going to...
It would seem churlish not to, I agree. Yes.
As we're open-ended, thank you for your £500 million. But a proportion in that. I'm going to go slightly off-piste here and say there's a beds theme that's going on here, and something that sits alongside student housing and residential is actually hotels. And so I'm going to persuade the wise and knowledgeable investors in the room that actually hotels are very interesting in terms of an asset class, of a return profile, of an investment asset class of scale. So a proportion of our allocation I put into hotels. You can still get long leases. You can still get some very high yielding properties. So hotels. And finally, I think a euro-denominated pan-European residential strategy, I think, is interesting. I think you can talk about German equity coming into the UK, but you have the currency hedge issues. So something we're very alive to is the problem of that 150 basis points currency hedge. But actually, if you put together a basket of pan-European countries where potentially some are developed for sale opportunities, some are safe, steady, secure income producers, so developed for sale, probably Spain, Germany, keeping your core steady income streams, blend that together, that becomes quite an interesting opportunity as well. So that's where my third pot of cash would go into.
Okay, good. Marcus?
I would also say be brave, go for a pan-European strategy, and then really to look for opportunities that are out there that might be, as John mentioned, UK PRS, where you have definitely to develop something or to forward fund something, but also possibly look at not so traditionally resi countries like Ireland. The Dublin area, you have a huge housing shortage, and you can capitalize on that possibly in different ways by if you're able to secure plots of land or to secure buildings. The other thing is looking at countries economically possibly not that interesting on the first step, like Finland, where you really see product coming and where you really have opportunities, given that the country is lagging the urbanization process you see all across Europe right now. So Finland is a little bit of a late starter on the urbanization side, so there is potential in the bigger Finnish cities to find. Germany is by far the most liquid or the largest investment market for rent, so it has to feature as part of it. So it will be also the chunk for any European strategy, but then also be a little bit looking on the outside. Spain was already mentioned, but there's also Portugal, a market where you see some legal changes starting to emerge that might offer opportunities to capitalize on.